You know what they don't teach you enough of in college? Life. Greetings and welcome to another episode of Is This Going to Be on the Test? My name is Joe Burns. I am a professor, a post hole digger, and I'm going to need a lot more than 10 minutes of your time. So this topic is going to be broken into multiple episodes because I want to keep each one of them at 10. Please like, subscribe, do those things. I said in the intro, the one thing we don't teach you a lot of in college is life. The one part of life that really bothers me that we don't go into enough are the finances of your life. You're an adult, we know that, you're 18 years old, and we, the schools, the government, can saddle you with an insane amount of debt. But then we don't go out of our way to explain to you, how do you handle that debt? How do you get paid? How does all of this happen? Some students I speak to have no idea how to read a paycheck. They have no idea what money comes out. The idea of saving for retirement is just off the charts for them. The idea of how much you have to pay to kill your student loans, the credit card rate, and it's absolutely outside of their purview. So what I'd like to do is tell you the way I did it, the way I do it. I can only speak for myself, obviously, and you should seek out other people to suggest to you how, at least your parents, to suggest to you how you should handle your money once you get out of college. Because it's entirely possible you will be dealing with a lot of debt. So, let's talk basics. I'm gonna be looking down a lot because I have all of my notes down here. I may just go ahead and pick them up after a bit. Let's talk in this alone, the idea of a paycheck. And you say, well, I've been getting paychecks my whole life. Yes, but it's gonna matter when you get out on your own and you start renting your own apartment and having to deal with your own person, especially if you have a lot of extra bills, because you're gonna have to be able to get rid of those bills as quickly as possible. So, for the sake of argument, a company hires you and says they're gonna pay you $50,000. Now, will they? Well, yes, but you're not going to get $50,000 in your hand. And I think you know this. There is a difference between gross pay, what they state they're paying you, and net pay, what goes into your hand or goes into direct deposit, which is, by the way, the way you should do it. Don't get a paper check and then go cash it. Once you have money in your hand, you kind of want to spend a little bit of it. So send it right into a direct deposit account. So gross pay, net pay. Also, you have to be concerned about pre-tax money and post-tax money. So let's talk about those two things. About a third, probably a little bit more, of your paycheck, your gross pay, is going to be taken out before you see a penny. Okay, what takes it? A lot of different things. FICA takes it, retirement takes it, insurances take it, those kind of things. And let's go over each one of those individually because they really, really matter to the money that goes into your hand. First of all, let's talk FICA, that FICA. Look, that's Social Security and Medicare. It's 15 point something, 6, I think it is, of your paycheck. However, you don't pay it all. It splits with your employer. But if you own a business and you're self-employed, you will have to pay that whole FICA. So that's bang, right off the bat. Federal tax comes out and state tax comes out. Percentages, it depends on where you are, where you live. I don't even want to get into state taxes, but it's easy to go to your HR or your benefits or wherever, or whatever they call the department where you get paid from, and say to them, what are these percentages? Now, the reason you care about those percentages is because when you're hired, you will be asked to fill out a W-4. I thought it was W-2. W-2 is what you get at the end of the year that tells you this is how much money you were paid and such, and it's what you use in order to file your taxes. A W-4 is what you're going to get when you first get there. And you fill this out asking for a certain number of exemptions. The people in your company that deal with the money should be able to tell you what each one of those exemptions means. What they're probably going to tell you about is if you choose this exemption, it's going to be the most money taken out of your paycheck. If you choose this exemption, it'll be the least amount of money taken out of your paycheck. Again, I can only speak for me, but I would have as little taken out of my paycheck as possible because you shouldn't get a tax return. You shouldn't get a tax refund, which makes people go, "You're crazy, man. I get a big tax refund and I go and I buy a TV set or what have you." I consider that dumb. The reason you're getting a tax refund is because you are overpaying your tax. And at the end of the year, when you put in your deductions and all those things, the government simply gives you back the money that you overpaid. And they give it back to you without interest. So what to do? This is going to take you a couple years to get it just right, but you should make an exemption and also pre-tax items that make it so you actually pay a little bit on April 15th. How could we do that? Well, the reason is the money that you're not overpaying to the government is in your account and is earning interest. Oh, it's only 1%. Look, if you want to use your return as a savings account, I can't get at it, that's great. Me personally, I'm of the opinion if I'm going to save my money, I want some interest to it. I would make it so you do not get a tax refund. But that's just my thought process. Let's talk retirement. Oh man, I'm 23 years old. Yeah, and you should be saving right now, right now. If you, and the numbers change all the time, but if you simply do a Google search for how many people are not at all saving for their retirement, the number just keeps going up and up and up and up. The idea of a pension, working for a company for 30 years and then they continue to pay you your salary or a portion of your salary, is it still out there? Yes, of course. Government employees? Yeah, some of them. But it's basically non-existent. You are responsible for your retirement. And you're going to have to do it one of 3 ways. And some people may argue with me if these are 3 ways or not. But number 1 is what you've probably heard, the 401k. And it's called the 401k because that's the tax section that describes it. If you looked at the tax code, 401 parenthesis K, that's it. That's the one that shows it. Here's what you should do with your 401k. Speaking for me, go talk to your people. Go talk to your benefits people, your HR people, whoever deals with the money at your business, and ask them, how much does this company match? Yeah, a lot of companies, most companies, you put in X number of dollars, say 8%, 6%, then they match it. So instead of putting in 6, you're actually putting in 12. So whatever they're matching, I'm of the opinion that's what you should put in. So you get the full amount. Now, some people will tell you that you should always go over, put in as much as you can. Although I agree with that, I think in the 401k, you should only be putting in the match. If you want to do more, you should open either a 403b or a Roth IRA. What's the difference? A 403b is a personal 401k. I get it. I understand. But what's wonderful about a 403b, which is what I have, it's pre-tax money. The amount of money coming out goes into the 403b. A Roth IRA, individual retirement account that people talk about, that is post money, which means after your money has been taxed, that's when you take it and you put it in a Roth IRA. What's the selling point of each? Well, the selling point of the 403b is it's pre-tax money. The selling of the Roth IRA, it's post, which means when you pull the money out of the 403b, you're going to be paying a higher percentage rate of tax than the Roth IRA. Some people believe the Roth is the only way to go. I don't, because I've been running my 403b for decades And I think it has grown enough that I will defeat the amount of tax. But look, talk to other people. You don't have, Joe said this, do it. And talk to other people. Make sure you get some other input into that. Personally, 401k and a 403b. Whatever your company matches, that's what needs to go in. And furthermore, it's wonderful because the money isn't even in your hand. You just learn to live without it. And if I could throw one more thing on the pile about retirement, never touch it. Never touch it, never rate it. I understand that there are just horrible things that happen, and sometimes you have literally no choice. But gee, I want a nice car is not literally no choice. You know, it's this or bankruptcy. Now we're talking. A horrible medical condition. Okay, then you can think about going into the 401k. But outside of something very bad, none you touch. Don't touch, period. Okay? Insurance. You're probably going to have insurance through your company. However, you're probably going to be able to get a lot more insurance than what is sort of just being offered. You probably have something akin to Medicare, Medicaid, something that's being paid for, okay? But they don't have dental, or they probably do. You just have to go, again, talk to your benefits people. Dental is probably in there. It's just an amount of money. Find out how much that amount of money is. Because look, as you get older, this just didn't happen. This just didn't happen. That's a lot of trips to the dentist right there. That can get rather expensive. There's also optical. Here's the thing, I've never had optical. Why? Well, with the proliferation of those 2 pairs of eyeglasses and a free exam for 60 bucks, I found it easier just to pay out of pocket. So look at the insurance. Is it good insurance? Excellent, but it doesn't have dental. Oh, I'll bet it does. Go find out. And if you're allowed, if you're able to pay for it, my opinion is you do, and you take however many free cleanings you get per year. Why? The more somebody's looking at your teeth, the less problems there are. Remember, health is wealth, ladies and gentlemen. And finally, one more thing, and I know I'm way over time. Reimbursements. Ask your company if they reimburse anything. Now, they may say, no, you just take it all off your taxes. So like, we require you to buy a blue shirt. That's a deduction. Take it off your taxes. However, it could be that the company says, yeah, we reimburse all office supplies. We give you 4 cents per mile or something like that. If that's the case, go to your benefits people one more time. Find out exactly what is reimbursed. And whatever it is, keep phenomenal records. And that money will go back into your account. Okay? So there's my discussion of Paycheck. The next thing I want to talk about is how to physically manage your money, and we'll do that in the next one. So that's it. Is this going to be on the test? Probably not, but it should be. We really should teach more life in college. That's it. Bye-bye.